In this presentation, we will take a look at multiple choice questions related to financial statement analysis, going through those questions and then practicing test taking skills with them. First question, cost of goods sold, 750,000, ending inventory of 32,000, and net sales of 2,538,000. The day's sales in inventory is what? We have our answers down below. We're going to format this in Excel. Remember, as we format this in Excel, our goal is really to just visualize the table. If you have to do this in a test question without Excel, your goal is to visualize the table. So you could do that in Excel. It's a little bit faster for me. I think it's faster for most. You could practice your tools in Excel by doing so, and then visualize how you set it up. Once you set it up, whatever tools are given, you can do so as long as you can visualize the table. So we have the cost of goods sold of 750,000. We're looking for the days sales in inventory. So I'm going to say, all right, cost of goods sold. One of the numbers they gave us, I'll just say cost of goods sold, is going to be the 750,000, and then we've got the ending inventory and net sale. Of those two numbers, we're typically considering the inventory. So we're considering the inventory and the cost of goods sold. I'm actually going to put the inventory on top. So I'll say the inventory is the 32,000, and then the net sales has to do with, that's the top line. That's not net income. That's net sales, the revenue line. But that's not usually the number that we would think of when we're thinking about inventory, because we would typically be considering inventory. The journal entry related to inventory is, when we make a sale, we debit accounts receivable, credit sales, and then the inventory side, credit inventory, and debit cost of goods sold. Cost of goods sold, inventory, those are related with the journal entry. So you would think when we do our ratio analysis, those would be the two kind of numbers that would be related. So I'm going to keep these two. Then we want the days sales. Anytime you see the days sales type thing, you're thinking, I'm going to have to work in a 365 type analysis here because that's the number of days in a year. That's going to be that one ratio or one of the ratios that has the number of days in it, 365. So what I would think then is I have to do something with these two, probably divide them. I'm going to divide the inventory by the cost of goods sold, and that'll give us our subtotal that we'll multiply times 365. So then we'll take that and say, okay, I'm going to multiply that times 365, and that's going to be our calculation. So we'll say times 365, and this is going to be this times this, and then you can consider how many decimals you have. Now, if you didn't really know this, your other type of calculation that you would do is you might reverse the division problem. You might say, I need to divide these two. What if I divided the 750 divided by the 32, cost of goods sold over inventory? Well, then we'd get this number, and if you were to multiply that times 365, it would make no sense, right? So if you were to get that, that's probably the most common confusion. So I would think, okay, there's a day's sales in it. That means I'm going to have to multiply times 365 something. And I know I'm going to be dealing with inventory and cost of goods sold. Those are the related accounts. You typically divide those because we have to do some type of ratio division problem. It makes sense to divide inventory divided by cost of goods sold because when I take that and multiply it times 365, I get a number that makes sense in terms of days as opposed to this, which makes sense not in terms of days. And this number is something that's going to look more like probably the answers that we'll see in the multiple choice question. Question then being, where do they round it? It looks like it's rounded to a whole number. 16 is the one we had. So we're looking for C, final answer. Next question. Net sales of 4.6 million, average total assets of 1.3 million, and net income of 920,000. The total asset turnover is what? And we have our numbers down here. You can see the format of the numbers, which may help us with our calculations. So we're looking here for the total asset turnover. So when we're considering the total asset turnover, we're considering the balance sheet accounts of going to be total assets. That's going to be a subcategory of all the assets. And then we're going to compare that to something on the income statement. And if we're considering total assets, we might be comparing it to, the top line or the bottom line, you would think, right? We would be comparing it either to the total revenue, total sales, or to basically net income, you would think, right? Those would be the two type of accounts. The goal is sales, and the net income is going to be the bottom line number. So in this case, of course, they gave us the net sales, so that seems appropriate. We're going to say net sales, not net income. Net sales is the top line. It's going to be net of things like contra sales account, contra revenue accounts, things like returns and allowances and discounts. So that's going to be the top line number, and they gave us total assets. They also gave us the net income. So we have to decide which one are we going to use here. The total asset turnover has to do with the sales line, the top line. So we want to basically make sure to pick up the top line. This one's there to kind of throw us off. So we're going to say, all right, here's the sales top line, and 4.6 million. You could type, that could be confusing to some. How do I format 4.6 million? What that means is 4600000. So remember, a million has 6 zeros, and if we have 4.6, it's going to be 4 with 6 zeros, but now there's a 6 instead of a 0 there. So that's 4.6. So just that could be confusing if we're not used to big numbers. And then the average total assets of 1.3 million. So the average total assets. Now, normally we'd have to calculate the average, which would be the beginning assets plus the ending assets divided by 2. This average wouldn't be on any financial statement, but they're giving it to us in this scenario. So they're just going to give us the average. So we normally have the beginning and ending. The beginning would come from the prior year's financial statements. That balance on their ending would be our beginning, and then the beginning balance on our statement. Here they just gave us the average. If we were to calculate it, I would pull it on the inside, calculate the average, beginning plus ending, adding those up, divide by 2, break it out over here. This one they just gave us, again, 1300000. I'll just put all the zeros in there instead of working with decimals for the 1.3 million. I think sometimes that could lessen confusion for people to just write the whole thing out, even though it takes a lot of zeros to write out. So now we're going to say, okay, there's that, and we can divide this out. 4,000,006 divided by 1,000,003, and then determine how many decimals we're going to have in here. Now again, if you were to take, in this case, the 4.6 and the 1.3, because those are all, the relationship is the same, and we're using ratios, we could say this divided by this would give us the 3.54 as well. But obviously, if you're dealing with something 4.6 million, and then you're dealing with some other number like net income here that's represented in 920, then you're going to have to write the whole thing out. So I think most people, when we're learning this, it's better to just write the thing out, put all the zeros in there instead of the 1.3, and that also helps us to really grasp what that means. So we're left with the 3.54. Let's go back over here. We're looking for 3.54. Looks like D is the one we're looking for. Next question. Net income divided by net sales is either A, return on total assets, B, profit margin, C, current ratio, D, quick ratio, E, day sales in inventory. Let's go through this again using the process of elimination. Net income divided by net sales is the either A, return on total assets. So there's no assets at all in this scenario, so that doesn't seem right. B says the profit margin. Now note it doesn't say ratio here, so I'm a little bit hesitant to say, but profit margin kind of sounds, if it had ratio, it sounds reasonable because you got the sale in that. And then C says current ratio. And this should be one of our most familiar types of ratio, current assets divided by current liabilities. It has nothing to do with the net income or sales or anything on the income statement, so that doesn't seem right at all. D says the quick ratio. That should be one of our second most familiar ratios, and again, deals with asset accounts and liability accounts, so this word doesn't have any sales in it, which is a revenue income statement account. And then E says days sales in inventory. So days sales, it has sales in it, so everything else doesn't seem appropriate, so maybe you can keep that, but inventory doesn't sound right. So if I go through this again, net income divided by net sales is the of the profit margin or the day sales in inventory, although the profit margin doesn't have the ratio in it, like I would like to have to basically verify that we're talking about the profit margin ratio, that it seems like the most appropriate answer, because E doesn't seem right with just focusing in on inventory. We're not dealing with it inventory, so B seems like the correct answer. And